Building an inflation-proof retirement fund with low risk is something every retiree should think about, especially when inflation is rising and the stock market feels unpredictable. You're probably concerned about maintaining your purchasing power without risking the money you've worked hard to save. So, let's dive into how you can protect your retirement savings and even grow them in a way that's low risk. First off, many traditional retirement options, like stocks or bonds, often leave you exposed to inflation. In fact, inflation erodes the value of money over time. So, if your retirement fund is primarily invested in these types of assets, it might be time to rethink your strategy. Now, before we get into the specific strategies, here's a quick tip. If you're serious about protecting your wealth over the next 2 weeks, I highly recommend you check out the first link in the description to see why thousands of Americans are choosing gold IRAs to safeguard their future. This free guide will show you exactly how a gold IRA can protect you from inflation and other risks. But let's talk about why that might be one of the best decisions you can make. One of the first ways to build an inflation-proof retirement fund is by diversifying. And I'm not talking about just having a mix of stocks and bonds. True diversification involves finding assets that are less vulnerable to inflation. That's why precious metals, especially gold, have always been considered a hedge against inflation. Gold has historically held its value even when everything else seems to be falling apart. When the dollar weakens, the price of gold tends to rise, helping you preserve your wealth. You might be wondering, why not just stick with savings accounts or government bonds? Well, those are often too low yielding, and with inflation, they could actually lose value over time. For retirees with significant savings, like 100K in an IRA or 401K, or even up to $5 million, it's essential to consider a strategy that goes beyond low interest options. Another great way to protect your funds is through real estate investments. But here's the catch. Not all real estate is created equal. Some properties might be more vulnerable to market fluctuations, or even geographic issues like natural disasters. But when you look at real estate within a self-directed IRA, you gain control over the investment and can choose more stable options. Still, gold-backed IRAs outperform real estate in terms of low risk and reliable returns, especially when it comes to protection from inflation. Speaking of gold, gold IRAs are one of the best ways to shield your retirement savings from inflation. They allow you to invest in physical gold or gold-related assets within a tax-advantaged IRA account, ensuring your retirement wealth stays intact as inflation rises. And because gold isn't tied to the stock market, it offers low volatility compared to other investment options. Plus, it's an easy way to diversify within your IRA without dealing with complicated real estate transactions or volatile stocks. If you want to protect your retirement fund and make sure it's inflation-proof, gold IRAs are an exceptional tool for doing so, especially for retirees. They give you peace of mind, knowing that your wealth is shielded from the forces that can erode your savings. If you want more details about how to set up a gold IRA, why not check out the free guide in the description? If you have $100,000 or more in your IRA or 401k, or even if you've got $5 million in savings, this free guide will show you exactly how to start protecting your wealth today. As we wrap up, keep in mind that building an inflation-proof retirement fund doesn't have to be complex. It's all about finding the right balance between low-risk investments and inflation hedges like gold. Don't wait until inflation has already taken its toll. Act now to protect your wealth and ensure a comfortable retirement. Click the link in the description, and if you're ready to take the next step toward a secure, inflation-proof future, let's make it happen.